Good afternoon, everyone. On behalf of Axis Mutual Fund, firstly, let me welcome you all to our press conference to announce the launch of our latest NFO. Firstly, genuinely happy to see a full room here. Also, we have a few people who are not based out of Bombay, a few journalists who have joined us online today, virtually. And yes, it's a very significant moment for us today because we're having a press conference after almost 4 years today. And today's conference will be led by our MD and CEO, Mr. Gopkumar. And then we have Shreyash Devalkar and Nitin Arora, who will be taking us through the entire fund. And finally, we'll have Mr. Raghav Iyengar, our Chief Business Officer, who will be delivering the concluding remarks. During the entire course of the float of the event today, we will take you through our belief on on how India's manufacturing theme is expected to unfold, how our fund positions itself against this backdrop, and we will be extremely happy to answer any questions that you have. So without any further ado, let me introduce on stage our MD and CEO, Mr. Gopkumar, to welcome you all and deliver the introductory remarks.
Thank you, Apurva. First of all, good afternoon. Thanks for coming in. Today we are having a press conference on manufacturing NFO. Before I hand over to Shreyash and Nitin, a couple of words in terms of why we believe that this theme is very important for us. India is moving to a $5 trillion economy. I think that narrative is very, very strong. We have also, government has called out a couple of sectors which we will empower this $5 trillion economy by 2027. We do believe that manufacturing is one thing which is a great driver for that. If you really look at the numbers today, it contributes almost 16 to 17% of the GDP pre-pandemic basis. If you look at the initiatives what the government has taken from 2014 onwards, whether it's Make in India, Atmanirbhar, PLI schemes, and if you look at the FDI flows recently, you will see that manufacturing has become a key important driver for the $5 trillion economy now. We do believe that there is an opportunity for our Indian investors to participate in the $5 trillion economy theme, and manufacturing is going to be a key pivotal role to reach us. And we also looked at and see that the indexes, which the benchmark what we talk about, which is manufacturing index versus the most popular index, which is the Nifty 50 and Nifty 500, we also believe that that couple of sectors which we looked at as an opportunity in terms of valuation, because they are not at a historical peak, and we do think that there is an interesting theme emerging in terms of looking at these companies now. I think what we are trying to look at is also it's a thematic in that sense, but when you look at manufacturing, it gives an opportunity to look at 11 sectors, 66 industries. It's largely diversified in that sense, because historically, if you look at thematic, has been very, very focused on particular themes, whether it is a sectoral fund or a thematic fund. Historically, if you look at, that's how it looks like. But when you look at manufacturing as an index, I'm not even looking at the portfolio construction, what Shreya said, Nitin will speak about, it's much more diversified. And if you look at the Nifty 50, it is always largely led by services sector, not led by manufacturing as a theme. And our belief is that we have a very broad-based theme when we look at the indexes. So this is the thematic one and well-diversified fund. Now I'll give to Shreyash and Nitin to take over from me. And we are here. Any questions we would like to answer?
Sure, thanks. Yeah. Thanks. I'll just take you through few slides on the background for this fund, and then Nitin will take you through the details, more details on how we are looking at the fund as such. So manufacturing theme as such is probably now all of us know because of multiple reasons around. It's first started with government focusing on it way back since 2014, Make in India. There has been various policies around it. So if you just go through it, I'll just highlight key aspects of this. So first of all, it goes back to the basic, what is manufacturing? Actually, when we first made this slide and the next, it reminded me of one of the question that what is machine? That question you must have heard in 3 Idiots, right? And the answer to is very cliche, and now that's where a very technical answer to it. What is manufacturing? Obviously, we should know that what is the technical answer to what is manufacturing. But in the context of investors, and in the context of which sectors we are going into, when we talk about manufacturing, this is where, this is what we all understand now. This is manufacturing, right? When we look at what is sector and what are the sectors in it. Now, if you look at the sectors in detail, that the part of this manufacturing as a segment is, the large part is into auto and auto ancillary as a sector, because obviously that is a manufacturing. Chemical industry, again, if you look at chemical industry in India, has been doing well since 2016. It's not now. Actually, this industry exists in India since 1980s. Multiple entrepreneurs are working here for multiple generations. So it's not that this is something new we are talking about, right? Because the feel which everyone gets is, okay, this is something new, and whether it is just a theme today. It is not a theme today. This has been playing out for multiple years. If you see, auto as a sector has been there in India for multiple years, right? And that sector has transitioned itself from diesel, petrol. Now some of the companies are doing EVs as well. If you look at chemical again as a sector, since 1980s, we were superior in our pharmaceutical exports. Is one of the key skill set which we had as a country was in the chemical industry. That's where this sector has been doing well for us for multiple years. Pharmaceutical, again, every one of us know that we are one of the largest exporter by volume of tablets to US. By value it may not be, but by volume we are the largest exporters of tablets. Then there is a capital goods engineering. Here we are actually gaining ground. Multiple MNCs are setting new plants. Electrical, electronics, food, beverages. Textile, again, we are one of the second largest cotton producing country, and that is one of our strength. Because of that, we are actually, again, one of the largest exporter of home furnishing, that is the bed linens and all. So that is we are largest. Though in apparel we not be largest, but in the home furnishing we are one of the largest. Consumer durable building materials. So these are the defense, aerospace, again. So some of these industries, if you now see, some of these industries are outcome of investment of multiple promoters for decades in this industry, and we as a country has gained knowledge into this industry. Some of these industries are outcome of policies like defense, as well as EMS, that is the electronic manufacturing services industry, wherein government particularly focused on reducing import, and that's where that process started way back in last decade itself. And now with and it's more to do with the confluence of multiple things going in our favor. It's not only one thing which played out. It is about promoters. It is about we as a country and educated manpower. It is about policy. It is about China plus one and geopolitical equations which started changing, especially post-COVID. So it's a confluence of multiple parameters. Some of them played out recently, some of them were playing out for multiple decades. So this is going to be about the manufacturing in that sense. I think some of this historical perspective I already highlighted, that it's that from multiple years some of these industries are developing. Some of the industries, as I said, are outcome of the more of the policy push which we had in last 10 years. The outcome, again, if you want to see in numbers, so one is the narrative part of it, and other is the real outcome in numbers. That's where one need to focus about. And now if you look at that registration of new company, you know that always in India, when it comes to export services, we have done extremely well. But again, we are one of the largest exporter of software services, and that has been outcome of our English-speaking manpower, which actually played out over last 3 decades or so. And now if you see the number of company, so this is one of the metric which we have used, that number of companies registered in India in 2015, 2018 and 2022. right? In multiple sectors. You will notice that now that number of companies getting registered in services sector as a percentage of total company has come down to 64, while number of companies getting registered in manufacturing sector has moved up. Right, so there are these changes which you are already noticing. The FDI in the manufacturing sector has increased, and it is getting more granular as well, because the manufacturing sector, unlike some of the infrastructure sector, may not require huge amount. So some of the questions which comes is, okay, the number is broadly there, but by number of companies are doing it. So because individual investment may not take a huge amount of investment. So why all this happened? Again, if you want to focus on multiple policies, so there has been Make in India, there has been Industrial Corridor, India Stack, PM Gati Shakti, PLI scheme, Atmanirbhar Bharat. So all in all, the underlying theme here has been India's focus on reducing dependence on import, because at a point in time our electronics import was getting as high as a crude oil import also. And that fear is there, right? So the first urge started from that we want to reduce our import dependence. Later on, to further, it's not about just talking about it, and then to further fuel that and more people to invest or countries to invest in India. Then we actually tried to improve our infrastructure, and which is obviously important for anyone to manufacturing India. So it's a combination of multiple things: policy push, as well as I said, the external parameters as well. Now, if you look at some of the things, again, that those happened in last decade, but then it's, as I said, it's always confluence of multiple parameters. So one of the angle was also reduction in the corporate tax rate, right? So some things happened earlier, while its outcome is being seen now, and that's where the average landed cost in US of goods from India perspective, we are now getting competitive in that context. One more angle here is about investment and export part of economy. And if you notice, India's export actually increased in the first decade of this century, right? In the second decade, actually, if you notice, it remained here. And with the confluence of policy push, which started somewhere here, to various geopolitical changes worldwide, the net outcome is, look at the growth which we have seen in the exports. India's share in the global merchandise export has risen from 1.3 to 1.9 during this time. Again, a domestic demand is always important for manufacturing, because if there is enough demand for good locally, then local manufacturing is always encouraged, which is reflected in multiple things. If you see, even when you purchase expensive shoes, sports shoes, which are upwards of 6,000-7,000 rupees, you will notice that most of the time those shoes are not made in India, while the lower ticket size shoes are made in India. Why that happens is, again, how much is demand locally versus how much is demand globally. All those parameters play into picture. So India's consumption or domestic demand is also driving this urge for the manufacturers to manufacture in India. And that's where even consumption plays a bigger role for anyone to take a decision to manufacture in India per se. Again, these are some of the estimates on GDP. And if you notice that if India has to become the nominal GDP, this is a nominal GDP and not a real. So if India's nominal GDP is expected to grow to 7.9 by FY32. But here the contribution of manufacturing is expected to increase a lot. And the other part which I talked about, consumption. So when countries' per capita GDP increases, then the pattern of consumption also change. So the non-retail, so automotive, leisure, the spend on these items keep on increasing. So in the consumption part also, the spend on these parts actually is actually increasing more than 4 times, while the GDP growth may not be there. So the point is that the growth is driven by the manufacturing, expected to be driven by manufacturing, and even when the consumption grows, per capita GDP growth, the pattern of consumption changes, and those items, then the country starts manufacturing in India. This is just list of few of the announcement which most of the global companies made publicly to invest in India, and this is what it contributes to the FDI flows, which was there in the earlier chart. And then if you notice that the key point to notice here is it is across sectors. It is in semiconductor, it is in engineering services. As I highlighted, it is in footwear also. It is not only concentrated in one. So it is there in multiple sector, and that investment being announced by most of the MNC companies, and that process is on. And that's where this slide gives you that picture of it's not just about a talk. It is that some companies are actually putting their money here. In listed names, anyway, you know, multiple listed names have in their public calls and all, they have also announced such things. So yes, so this is about manufacturing. So more aspects of manufacturing in terms of how it touches different segments of the GDP. As you know, GDP comprises of consumption, investment, and net exports, right? And the government spend, obviously, which is also part of the investment. So these three are the key parts of economy. For any economy to grow, all these three elements need to grow faster. And when we are investing any particular fund, the more aspects that fund touches when it comes to these components of GDP, the more broad-based that fund becomes. And on this, to delve more into this, actually I will invite Nitin. He will take you through this aspect as well, the more granular aspect of the fund.
Sure. Thank you, Shreyas. I'll take that. Thank you, everyone, for joining in. So as Shreyas was mentioning about, there are three things especially we are looking in this fund. And to start with, it's always very important to look manufacturing in tandem with what is happening in your country with respect to consumption, because consumption eventually leads to higher utilization of plants, to be very precise. Now, here, the three things what we are focusing is, I'll just touch base on this only. So when we talked about demand, it's very important to look what is happening in your country at this point in time and what are the trends we see. So the first part of our fund, the first prognosis of our fund is C part, which is called consumption. We believe that the premium consumption or the discretionary spends will continue to increase in the country. I can give you some examples of it. And we are seeing this trend even from the past, but we believe it will further accelerate. Let's take an example of an auto sector. India sells about closer to 29-30 lakh cars a year. It was 50% is SUV at this point in time. 3-4 years back, or rather 3 years, just pre-COVID back, we used to sell 22-23 lakh cars a year, where the 20% was SUV. In the newspaper, you keep looking at, India is a number 3 in terms of volume. It doesn't matter at the end of the day. It's the value that matters. On value, we are almost like 40th, 50th number. But that's increasing. The content is increasing, which tells you that premium discretionary spends or the premiumization is increasing a lot. Despite all this, we have seen festive sales have been very good, as per the conference calls and as per the results by the company's autos. So I think premium consumption is continuing to increase. We're seeing that in the high-end launches of a real estate sales. Whatever is getting made or launched is getting sold out. I think it's a question of more of where is the more inventory now. We see it not, I would say, a premium consumption. Let's look at hospitals, large ticket items, but growing in double digits. You look at any apparel brand in higher end, despite such high bases of growing at 15-20%, they're still growing in double digit. So that tells you very clearly that the upper strata of the economy is very strong despite all of your inflation, all of your high base. There was a fear that it will fall, but we still see the trends are very, very strong at this point in time. When we look at the second aspect of the fund, which is your investments. Now, that is something, the important part to look at it. I touched base on the consumption part, but this is something, a very important part, which is the next theme of our fund, the I part. When we look at the capital acquisition budget of the government, India used to spend about 1.5 crore, 2 lakh crore. That's where we used to peak out pre-COVID. Government focused a lot and spent almost 10 lakh crore now across railways, defense, core capital goods, construction, roads, and there has been a huge capex which has been done. We believe that obviously from the private side, we are seeing that look, there are some green shoots, there are some areas where we are seeing manufacturing happening, and that could be also led by PLI. I remember, in the auto companies used to expand their capacities in 2010 and 2012. Leave aside the Suzukis of the world, that had the large market share. I'm talking about the other players. So these companies have just started increasing capacities. So that's something we are seeing, the capex is coming back. There are certain other areas where private is coming ahead and putting capex. And this is all driven by the premiumization which is happening in the country. That is one. So second, we believe that at least from a growth side, in the investment part, the capital expenditure will continue to increase. The third thing, which is the net exports. This is not typical IT companies, net exports. These are the companies which are now building the scale in terms of achieving the cost of, or rather realized cost of production of what global countries does. And this is all done because the government really came and focused a lot on giving PLIs, giving subsidies to the sectors. And though we have seen some of the companies, we see a lot of flurry of lot of PLIs being applied by across sectors, across companies. But what we see that there are only few companies who are able to build the scale to achieve the cost of production. We eventually became the net exporter for mobiles at the end of the day. PCBs is something, for example, just to tell you, we used to just assemble it. There's no value addition. There are companies who are now started designing PCBs for the MNCs, and that's where the value add comes. So I think net exports is something which is gives you a kind of a growth outlook, or kind of a growth where the companies who have achieved scale, I think they can go in the next leg with respect to the potential increase in the export side. We talk about India. India doesn't spend. I think when you look at in US has not spent in the last 20 years in their power and transmission capex. I still remember in US about 3-4 years back, used to import about $20 billion worth of power, cables, conductors from China. Now they have a sanction there, and they themselves are looking at this point in time that who can help them with that. I mean, you can Google it, it's a public information that, they're having so much issue in terms of their transmission lines, their substations. And I think that could be another net export opportunity for a lot of products in India, which I think nobody is looking at it at this point in time. So just to sum it up, this fund will have a summation of investment plus consumption and net export. So it's more of structural in nature. Being a thematic fund, it's important to look because theme can go and come. It can happen, and generally that's how the cyclicality of the business is. But we are trying to address in this fund and how structurally, each and every industry we can address, and who are really building the scale here in the country, who can eventually show you strong earnings growth. These are just the thing, I was talking about in terms of the investment, the transportation, defense, utilities, corporate capex. The defense exports is also something now started to picking up, but I think more of a domestic consumption is where we are more positive. Exports, at least on the electronic side, we have picked up. Same the household income distribution. And it's not that only in India. You look at US, you look at Europe, you look at China, rich is becoming richer at the end of the day. The gap is widening. That's where the premium consumption is really growing on a double digits. The same thing I was talking about with respect to the SUV side, almost 50% is the mix, which is very important for the auto ancillaries, because that's where you increase your content in your vehicle, your ASP starts going up. And that's something we talked about in the net exports. And that's where I talked about sectors like cables and wires, electronics, industrial products. As Shreyash mentioned, that chemical and pharma, we've been long back here. The countries any which was doing exports for a longer time. But these are some of the new areas where we believe that the scale has been made and exponential growth can be expected over the next 2 to 3 years. Just a case study of some of the ecosystem which is being made. Yeah, and this is just the construct of the index. The manufacturing index is it's been more of 27% autos, followed by cap goods of 21, and healthcare about 15%, chemical is about 11%. So that's been the manufacturing index construct. Yeah, so that's all I wanted to convey regarding this fund, regarding the thought process behind the fund. Yeah, happy to take any questions if you have. Yeah.
Thank you. Do we have any questions? Yeah. Could we hand over the mic to him, please?
Hi, Abhishek here from Business Standard. So Nitin, you mentioned about cyclicality of returns when it comes to thematic or sectoral funds. But since in this scheme you have a lot of options when it comes to sectors, so will there be an endeavor to deliver a more consistent returns, maybe through rotation of sectors, or will that be in your mind when you handle this fund?
So see, the focus right now is to construct a fund which is, as you said, about thematic. Obviously, when you exclude the BFSI and the IT, the 40% of the index is any which way is not there. And then you have a broad-based sectors to play with. Here, the thought process is to take more structural calls and structural bets, because we see, when we talk about manufacturing, we are seeing the levelized cost of production is getting matched. And we have seen, I've been an industrial analyst since 2008, 2009. I have seen this, that when your production cost starts matching in few of the sectors, I'm not saying across the sector it's happening, that growth becomes very exponential. So rather than, rotation, we would rather bet on companies or rather on sectors which can structurally drive the earnings growth very fast. And new themes are also emerging in the export side, as we talked about the net exports. That is something not been addressed so far in the same manufacturing part.
Shown the index construction, why not a passive fund instead of an active?
Take that.
So this index is represented here as more of a representation, right? So this is a benchmark for this fund. So just to give an idea to investors that what they are investing into, by giving a proxy, benchmark as a proxy to it. It's not necessarily the fund is going to be exactly this way, but this is just a broader idea one can get. So like in any other fund, when you invest, you normally look at it, what is the benchmark, and then you get broader idea, right, in what you are investing into. So the idea is more to do with that.
What about cost of manufacturing? That is also very high, and that's one of the reasons why manufacturing didn't take off in India, basically, and government stepped in. So do you think now the foundation is set for being competitive on the cost front?
So this cost as such is, it depends, it's different for different sector, and that's what we are trying to highlight. It's some of the items where, say, China or some other countries, they are having a global scale. Now at global scale, the costs are anyway going to be lower, right? Till the time you achieve that global scale, it's not about a country also, it's about the scale first. It starts with that, how much you are producing out of one unit. And then if you try to drill down on various reasons, in which sector, where you have a cost advantage, for what reason, and then if you then try to slice and dice among the sectors, then you will realize that in some sectors, inherently, because of the talent we had advantage, and that's where I highlighted some of the sectors like chemical, pharmaceutical, or auto, mechanical engineering associated with that. And in that, we have been doing it for multiple decades, right? Many of the companies in auto already are manufacturing in India and exporting to some of the other countries. So that process is already on. Probably in the sectors where the scale is huge, which is achieved by some of the countries like China, Vietnam, Taiwan, those components which especially come into this electronic manufacturing services where they have a high scale. So on those things, obviously, that's where the government is coming in and trying to ease out them for that, so that they can manufacture in India as well. So it's normally it is a long process. Immediately you cannot have the lowest cost in any particular industry. Once you have to give some benefit, then it starts, then you achieve scale, and then on its own you become cost competitive.
Inspiring, motivating to listen to India's success story. But I wanted to know, like, what exactly is the role of Axis Mutual Fund in it, and how you are gaining from the India's progress.
Okay, so we as at Axis AMC, so we are the investors, like, and our attempt is always to invest in areas, the sectors, subsegments of listed entities, wherein we can invest into it and try to gain returns for our investors. So in that attempt, you always try to evaluate multiple sectors. It can be manufacturing, it can be services, it can be financial services, IT, multiple such sectors. So that is always our attempt to try to find out which sectors, which segments are doing well, and then trying to make returns for our investors.
Hi, this is Ankur Mishra from ET Now. I want to understand the risk part of it, which has been highlighted. Why that riskometer is very high?
So if you look at the riskier part, though we believe that structural drivers are very strong at this point in time across the sectors, whether it's the consumption, investment, and the net exports. There's one area where we are not comfortable. Let's say the risky part is on the valuations, right? Now, when I say valuations, it's something the B2B businesses in the country are available at B2C valuations today. And obviously, they are available because the growth is very strong. I mean, you look at capital goods companies, earnings growth have been phenomenal. They're growing at 40% in 2021, 30%, and then 20% growth is continuing still, and despite being on the higher base. But valuations is something on that construct of the index. If you look at the cap goods, which is 21% of the index, that's where only the valuations are quite high. When you look at the other segments, whether it's autos, healthcare, metal, chemical, optically you are not at a very high valuation. That's the only area where we are a little cautious on that part. Shreyash, you want to add anything?
I'm just adding to it to make it a slightly more broad-based, in a sense that if you notice, when you look at any risk of any product, the risk, if you see, risk reduces by diversification and it increases by concentration, right? So any product like this, which is theme or sector oriented, few sector oriented, if you choose one single sector, then it is your diversification is less, so risk goes high. If it is few sector, the risk is relatively less, but is higher than most diversified product. And that's how, when it comes to any theme, for that matter, it tend to go higher on the riskometer from this point of view. So it is about product as well as what Nitin was highlighting, that in the next level of risk is whatever segments of it are there, whether what valuations they are and all, that also plays a role. So it's a combination of multiple things.
Hi, I'm Khushbu Tiwari from Business Standard. Just one question on the composition of your own fund, how will it look like? Will it also be heavyweight on the auto and automobile component side, the same way the benchmark is, or will you be a little more heavyweight on some other components or segments? This is the first question. And the second, because you mentioned that there have been recently rise in the number of manufacturing companies getting registered. Will they translate into coming into the primary market from the same such companies? More such companies coming into the primary market and then getting listed?
Sure. So when it comes to composition of the fund, we have given index or manufacturer benchmark, which is going to be for this fund as a proxy to it. so that investor get an idea of what we are investing into. At a point of deployment, we will decide that which are the based on opportunity, relative valuations, etc. At that point in time, which are the segments which we are going to be overweight or underweight on. But this is a fair idea one can get based on the underlying benchmark itself. As far as new companies listings are concerned, definitely more and more companies are getting listed in multiple sub-segments of it. And all of these, obviously, as long as they are part of this universe, we will evaluate all of them.
Just to add, this slide which we showed that new companies are coming and registered here and putting capital expenditure, new plants. I think there are a lot of companies, not these companies would get listed, but there will be a lot of supply chain that will evolve in India. And those will be that's what Shreyash was trying to point, those will be the companies which will come for the large listing part.
Shreyash, we have one question from our virtual audience as well. The question is that when it comes to manufacturing in India, the current theme of Atmanirbhar Bharat is fueling local manufacturing. So what does that mean for the manufacturing opportunity and the fund at large? Like, how do we play into that space?
So I think when it comes to Atmanirbhar or other opportunities where we are trying to capture global market, the important thing to look are two. One is when we talk about Atmanirbhar manufacturing, there are a lot of themes in the market at this point in time. The important thing to look, where does the levelized cost of production will hit eventually. And we saw that happening, as Shreyash stated in the previous answer also, that eventually happened in the auto ancillaries. The second aspect, after a long time, it took almost 5 years for the country to achieve the levelized cost of production in the electronics, not across the value chain, but at least, let's say, in mobile phones, we saw that happening. In PCBs, we saw that happening. And that is something where the exports, and that's why we are not saying that, look, an MNC sitting in US is going to change the supply chain from China to India. What we are saying, there will be a diversification that will happen. And that diversification will happen, which will eventually benefit few of the companies here, because there are only few companies which have achieved that kind of a levelized cost of production. So I think that would be our primary driver of these kind of a companies to look at into these funds. And that's the reason we chose that third leg of our fund, which was the net exports part.
Hi, sir. This is Shipra from Informist Media. I just wanted to understand that as theme-based funds are on the rise, so is the fund house planning to tap any other themes apart from manufacturing going forward?
So we keep on evaluating based on our product basket, what we have, what are the gaps in the product, as well as what are the opportunities available in the market. So that process is always on. If you notice, last multiple years, we have launched multiple funds in thematic category. So that process is always on, and we will evaluate at any particular point in time.
What about sectors that would be similar to index, or you would like to construction is not there for
So if you go roughly, and that's why we started with what is manufacturing, and there is one cliche definition of it, and then there are sectors which are including. So we have highlighted sectors which are part of it. So generally the services part we don't want to take into it. Obviously it's not part of manufacturing. So anything to do with services will not be here. The fund mandate is obviously up to 80% at least should be in manufacturing. In the rest 20, if any, it may or may not be there, the services component as such. But broadly 80% at least has to be in the manufacturing. So construction services are there, then it can be part of the 20. If it is not, it can be part of here. Because if you look at construction also, the companies are not purely construction. And that's where I use the word construction services is also classification out there.
Shreyas, we have one more question from the virtual audience. They want to understand that considering that it's a thematic fund in nature, what exactly are the risk factors that retail investors basically need to keep in mind when it comes to such kind of a fund, and what is the average time horizon that somebody should consider while investing in such a fund?
Okay. When it comes to any thematic fund, so you call it, there is an inclusion of these sectors, which can be autos or chemical, etc. And there is an exclusion part. These sectors will not be part of 80%, which can be IT services, financial services, etc. So that's what in the riskometer discussion we highlighted. The answer to it was, when you are saying that we will be part of a particular segment, we are not going to be part of a particular segment. So services has done well also in India, right, for multiple years. So we are not going to be part of a particular segment of economy. So to that extent, as an investor, by not investing into that companies and that sector also doing well, so if you are only invested in this fund, then obviously you are not part of that. And that's where the risk associated with the cyclicality of this segment of manufacturing is what the risk one carries. And that's where always it is recommended that investors should look at multiple products which complement their portfolio, right? So that they can diversify away their risk rather than getting into a particular concentration as such. So diversifying away risk is the always better approach. So if someone, this product on its own obviously is a risky, but one should look at it in their entire portfolio as such.
Thank you. Do we have any more questions? Okay, in case of any questions, we can also connect offline later, or you all can write to us. I would now like to call upon Raghav sir to please deliver the closing remarks.
Thank you. Thank you, Apurva. Thank you so much, all of you, for coming out on a working day. I think, I know 11 o'clock is a bit of a peak period for all of you. So we were a little worried whether we'll be able to get the right audience. And I think thanks to all of you coming here, it's made the event quite successful. It's also, like Apurva said, our first online or not. Earlier we used to do events online, all the previous 3-4 NFOs that we've had. So it's going to be a great opportunity to meet up with many of you on one-to-one. We're seeing pretty good demand, and we've done almost about 75 odd roadshows across the length and breadth of the country in the last 15 days. And post Diwali, we've really sort of stepped up the momentum. I think this is a portfolio, this is an idea which people want to invest in. Obviously, Shreyas and Nitin have very strong views on how this sector will make money for investors. It's something very complementary to Axis, because a lot of this portfolio will be quite different from the regular Axis portfolios given the exclusion of certain sectors. So it's a very good complementary product for our investors. We're also doing a lot of stuff on marketing. I think we are first time, I think in our last 3-4 years, we're doing a fairly large multilingual TV campaign. Typically in the past, we do English TV campaigns, just put out a couple of ads and do that. I think this time we are using the Bharat media to actually go out and try and get length and breadth of Indian investors to participate. The interesting trend we are seeing is that there's a lot of demand coming from what we call the smaller cities anymore. I don't think it's a Bombay, Delhi, Calcutta, Bangalore, NFO. I think the fact is that a lot of people on the outside, and I think that's interesting because a lot of this, those are the people who are actually seeing a lot of work happening on manufacturing. I think in Bombay we miss it because there's no manufacturing here. Manufacturing for us is constructing a building. But in the other parts of the country, you're seeing a fair amount of progress there, and especially places like Indore, Lucknow. These are places where people are actually seeing live factories coming up. So again, my thanks to all of you for coming. We expect to collect a good amount of money. I think hopefully this will be a large NFO for the year. We aim to target to get at least about 2,500 crores in the NFO. More importantly, more than the money, I think we're looking at really activating our entire distribution network. We're doing a lot of things on the digital side. Partners can actually reach out to their customers using custom-made links. We're doing a lot of things on the digital marketing, which will allow people to actually go in and see their portfolio, see the presentation pretty much online. A lot of things happening on our app. We have a very, very highly rated investor app. It's possibly the highest rated app in the country. It's about 4.6 is the Play Store rating. So we're using a lot of features there to also go out and talk to partners. So all in all, it's a great effort from all of us. And hopefully it will give us the required set of investors, the right set of investors, the right set of money. And then of course, we're very confident that Shreyas and Nitin will manage that portfolio very well and hopefully create value for our investors in the period to come. So again, thank you so much again for coming. It's been an absolute honor to talk to all of you. Please join us for lunch. Lunch is outside. Apurva? Yeah. So lunch is outside. Please join us. We are all here anyway. So if any one-to-one conversations you'd like to have, please feel free. Thank you again.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.